All right, Dewardric, help us figure this all out. So in previous years, investors, they relied on market reforms to help them kind of navigate their investments in China. But now you say China's become over-reliant on monetary policy actions, and that's really failing to resonate with investors. It seems like a bit of a catch-22. What are your clients telling you about investing in China right now?
Well, Frank, first of all, thanks for having me. Look, I think it is important to note that China has been trying through a series of monetary policy rate adjustments to get the confidence up. But Frank, it's missing the key constituents that I think will create that good news story, that narrative that will bring investors back or keep them there. And that is largely the private sector in China, which has taken a backseat to the state-owned enterprise sector, foreign investors, which we've just talked about, and then, Frank, the all-important Chinese consumer. Like, investors want to see that the trajectory in China, that the narrative in China is one that shows some growth and some improvement over the long term. And these sort of short-term adjustments that they're making, while helpful on some levels, doesn't present the sort of confidence that investors, many of my clients are telling me they need to feel good about putting their money in China and leaving it there over the long term.
All right. So some of these short-term measures not really working. What about just the fiscal stimulus we've heard a lot about in China, the so-called bazooka option? In your mind, is that on the horizon, something similar? And what would that mean for investors?
Look, Frank, it's not. You know, we have heard this for 2 years. It's kind of becoming a bit of a concern that people continue to talk this book. The Chinese have made it clear that the big bazooka that everyone is waiting on is not coming. Largely is not coming because philosophically she considers this sort of thing welfarism. He said that. He stated that very clearly. But also the levels of debt that China's dealing with does not really lend itself to this sort of big bazooka style stimulus. So I don't think it's coming. And I advise people to quit talking about it because it's not happening.
So it's a wrap. It's just not happening.
It's not happening,
It's just not happening. I want to tell you about foreign direct investment, also big U.S. companies investing in China. We've covered this a lot on the story. I know we've talked to you about it quite a bit as well. They're facing increased competition in China. I'm talking about those U.S. companies, whether it's coffee, automobiles, smartphones. How is that impacting U.S. companies specifically and their willingness to invest in China? And then how does that impact the investability of China for people who are equity investors?
So this, I think, Frank, is the other side of the story about what's happening to foreign companies and foreign investors in China. And listen, I've been saying this for a long time. If you're looking for a good news story, if you're China, it's Chinese companies, particularly in their own market. And in every single sector now, we're seeing Chinese companies really compete and win in their market against foreign companies, but also increasingly, Frank, competing and winning in third markets. If you look at athletic wear, for example, it's not Nike or Adidas. It's Li Ning and other companies in China. For EVs, we know this story. It's BD. It's not BYD. It's not Tesla. It's Huawei, not Apple. So this goes on and on and on. And what it's saying to many foreign companies is you're going to have to up your game and figure out how to speak to the Chinese consumer, product development, how you market, all those things. It's not an easy win anymore for foreign companies. You're going to have to work hard if you're trying to win in China, and many are not.